Rashidin Shuri. First trading day of 2025. I gotta get used to say 2025. Wow, right? Wow. All right, let's get right into it. Let's take a look at some stock that I think is worth buying for the new year. First up, Altria. Yes, it has come down, and I'm liking it here. Not to say that it's at the fib, but now that it come back here, time to draw a new fib. Okay, this is a fib that we drew a long time ago. Go back maybe a few months. It broke through it. I was waiting to see if it's gonna keep going to do a fib extension. So let's get rid of it. Let's remove this and let's do the same thing. Of course, you can do it right here too. Okay, you can do it right here if you want, but let's keep the old using the same one, and then we draw it all the way up there. You notice the double wick. Oops, I did that one too wrong. 5804 to be exact. There you go. See that double top there? Yeah, that was a warning sign. Even with the new drawn fib, you see this gap up line right here. That could be the spot, right? So if you want to nip right there at the 51-ish, 51.28-ish, okay, I think that would be a decent spot. Better yet, let's see what kind of action we have with the puts. We're going out to Gen 17. Okay. Look like 52 and a half. If you do 52.50, that look decent. Okay, 52.50 you might get 40 cents, maybe at least 30 cents. Okay, 52.50. That's too close for comfort, right? For some people, 52. I'm not surprised that there's not much right now for 50. If there was juice right here, the gap fill is 50.59, right, or 50.6-ish. So let's take a look again. Yeah, there's not enough juice there. Okay, it's not for Gen 17. Now, if you go out further, yeah, it's still not much. Okay, so at the end of the day, I think there's not much to do with the puts there. So I would put a buy order there at the bottom of the gap is 51.35 to be exact. 51.34 to be exact. So yeah, throw in an order there. 51.34. And then a bigger one at the gap fill, and a bigger one down there, right, where the 200 MA is, that line up with the 55th, and the zone of consolidation here, right? So yeah, it's a couple of spots to buy, but the first one is right there. I like that. PM, fill the gap. I like it even more. Okay, so out of Philip Morris, it's a better pick than Altria. It has filled the gap. Okay, and same thing here. I'm just gonna take out this old fib and redraw it. There's gonna be a whole lot of redrawing of fib for mini chart starting this week and next week. Okay, so I like it here. So if you want to do, let's see what kind of put action you have. 17. Slightly better, right? Would you do 116? Yeah, I would. See, 116 get juice. You can do a 116. Um, Hard to say what the next one is, but if I was to look to do it, it'd be 116, 114, or 116, 113, something like that. If I can get at least 25 cents on the $3 spread, that might be worth doing it for Gen 17. So yeah, I would throw it in. Yeah, 116. I would not mind at all. Now, what is this orange line? What is that? Why is that one orange line there? Let's take a look. That makes no sense, right? Sometimes you draw lines that been around forever. Let's look back even deeper. Maybe it meant something. Yeah, not really. You know, yeah. Can you see that it's a channel? Kind of. Yeah, kind of. I'm not sold on that channel. Okay, I drew it in, but yeah, it's not kind of what it's all over the place. You can see, it's all over the place here. It's all over the place here. Yeah, I wouldn't call that line worth anything, to be honest. But um, what I should draw in is this right here, the prior 52 week. It's kind of lined up with the fib. You see that? Yeah. I'm gonna draw that in so that we see it right there. Right there. Okay, so that's just for visual. It basically lined up almost where the gap up is, right, and the fib as well. So that's significant because that was the support, right? You see it gap up and it come down where the gap up was, defend it, and then slice through it. But now, yeah, now it filled the gap, so I wouldn't mind buying right here. In fact, I would put in an order right now. Well, look like it could be a green opening, but I would put an order in, say, at 120, and see if it happened. Okay, I will throw an order at that. Bud, oof, ouch, ouch, ouch. I have bud, a lot of bud, not as much as tap. Thankfully, I got out of tap for profit on a rebound. But I like it here. Yeah, I don't hate it here. And where did I buy mine? Up here. I got the share assigned up here, right? So, which I thought this zone was gonna hold, but it did not. Let's go back 3 years to see what's going on here. Okay, so the 3-year low is way down here at 44.51, which kind of line up with this purple trend line here. So can it get lower? Possibly. Possibly, okay, but for now, I don't hate it. I do not hate it. Let's go back even more, 10 years, see what happened. Yeah, yeah, that's ugly. Wow, Bud was 136. Yeah, it's been so long, I forgot how high Bud was. Oh, how the big brand, the almighty Bud has fallen over the past 10 years. That's just ugly. That is just one ugly chart. But no, I don't hate Bud here. Would I buy more? If I don't see anything more attractive, but I'm fine with what I have. Right? So STZ, oh, it's ugly. It is ugly. Right? It is. Look at this thing. Same pattern as Bud. Right? So whatever is driving this sector down, whether it's stoking fear of inflation surging again or whatever, trade war, tariff, fear, all that stuff. Okay, that all that. That's what driving why Bud and STZ. Oops, wrong one, wrong chart, wrong chart. Can't type. STZ. Here we go. Similar thing, right? Similar thing. STZ. But that's the reason. Okay, look at this thing. 1, 2, 3, 4, 5, 6, 7, 8. 8 red candle in a row. That's when you see candle, red candle that go past 5 or 6. It's serious. But yes, this is all the tariff talk about Mexico and blah blah blah. Okay, so politician will grandstand. Okay, the Mexico president can talk tough all she wants. We will see. It's all about negotiation. Okay, so as far as STZ, yeah, same thing here. If you willing to take a risk, that look at this chart. Yeah, I don't hate STZ here. Flip a coin, Bud or STZ, either one. Either one would be worth taking a risk down here, in my opinion. Last one for today, Costco, which I think is worth buying. Or look at where Costco is. Okay, first of all, let me draw in this thing into a channel so that we cement it as a channel with the purple. You know me, I like to highlight purple. There you go. Look at that. Top, bottom, top, bottom, bottom. Almost got there. Ran out of steam. Bottom. We're at the bottom. It been riding the 100 MA. See that? Boom, boom, boom. Is it worth buying a couple share? You decide. Let's go back 3 years. This is all-time high, so it's not much to go by, right? Look at this channel. Yeah, amazing. Sure, I missed most of this. I trade Costco so many times over here. And then this year I say, oh, too expensive, too expensive, too expensive, too expensive. And I do think this is a key spot here. If this fails, we can see some serious. Look at this. Okay, I'm going to draw in a zone. I'm going to draw in a zone. You know me. I like the zone. Resisted, 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 resisted. Breakout. Check back. Check back. Okay, so there you go. There's your zone. Now, if you are squeamish on buying share here, you can play the put spread game, and the put spread game can be played at this level down here. Let's take a look. Let's take a look at, is there anything at 865? Is it worth 865? 865. Come on. Here we go. 865. Yeah, there's some. It's gonna be some juice. 865, 860. Look like there is potentially 30 to 35 cents of juice. Yeah, I like that. I like that a lot, to be honest. For a $5 spread, and you get 35 cents credit, and down here, which is not a bad thing, right? Now the only bad thing is what? What is the only bad thing? Should it break through this wall, this level of support, and come down here to this ref low? Sure, it's a nice bargain, but what? It's falling out of the channel, and by now we should learn the lesson, right? When something falls out of a channel, it is dicey. Okay, it is very dicey, because once it's 4 hour channel, especially you're talking about a year-long channel, it could be a new trend down, right? It could be. Doesn't mean that it is a no-no. It's just that if it come down, hypothetically speaking, if it come down here and I buy share, right, then I would be very quick to pull the trigger to sell those share here, because what was support will likely turn into resistance if I buy those share here. So keep that in mind. If you sell put spread down here, be ready and willing to own the share if you have to, but also pull the trigger quick to get out if it bounces back up there. But I like it. I like the 865 spread down here. Now, if you extremely squeamish, then use the 200. Okay, use the 200 as your last line of defense at 850. So let's go one more. Is there anything at 850? There is juice. The question is how much, right? Look, there's potentially 20 cents of juice here. Potentially. I'm not saying that you might get even 15 cents. That might be a better play, right? Safer play, you get half, at less than half of what you would get above, but you bought yourself a lot more protection. So if you don't mind 15 cents credit for a $5 spread, which I think is a good trade-off for an extra an extra $15 of protection, which is a lot. Okay, you're buying yourself $1,500 of protection on 100 shares. So yeah, I don't think that's a bad play either, to do the 850, 845 instead of an 865, 860 spread. So either way, I think it's attractive. If you want to outright buy a few share here, might not be a bad idea. Should this is the bottom and it hold. If not, say hello below. All right, people.